Can you guys hear me?
Yes, we can hear you.
Nice to meet you all. All right. So, first off, of course, I would like to welcome Dr. Anmol and also Michael to join us for the panel discussion. And of course, today would be, I would say, one of the better days for the crypto because the markets like bounced back and oops. Yeah, the market bounced back, and we see great news everywhere, including the tariffs. Although it's not like a confirmed ones, but it seems like the Trump is getting it slow down on the tariffs, and of course the SEC chair is being confirmed as well. So there's a lot of things going on, and that caused the market to bounce back. And of course, one of the great news would be also Coinstore hitting a 10 million user. That would be one of the great news and also a news that we announced earlier on. And of course, part of the 10 million campaign, we will host several panel discussion. So that would include the bringing real world assets on chain, which is this panel discussion, and also there'll be more coming up soon. All right, so let's just get the panel discussion going. Of course, first off, I would like to get both of you guys to make a quick introduction about your project, and also who you are and what you do, and also share what motivates you to focus on the tokenization and also the RWA infrastructure. So, Anmol, would you like to go first?
Sure. Thank you so much for having me. And it's exciting times. Sometimes we create our own problem, and then we find a solution of our own problem, and then everyone's happy. So the good news is the tariff side. Things are getting settling down hopefully soon. So the economies and people can focus on growth. So I'm a cardiologist practicing in Canada, and I have a background in information technology. And if we come across various challenges, and definitely the motivation essentially was there was a clear gap in how traditional assets were accessed, managed, and transferred, especially in the sector like healthcare, biotech, and even real estate. So, coming from a doctor and medical background, these challenges definitely deeply involved in as a motivation, and when I realized that a lot of real world values were locked in efficient siloed system, is fragmented system. Tokenizations helps enable fractional ownership, perhaps greater liquidity, and more transparent governance for these assets. So we did found Anryton blockchain, layer on blockchain, and our aim was to build the backbone for RWA infrastructure, bring together compliance, scalability, and perhaps cross-border utility because healthcare data or the clinical trial data or biotech data needs to move around freely. So we wanted um, to create a blockchain network, not just because about speed or decentralization for the sake of it, but essentially enabling real economic activity for intellectual property, tokenizing it to perhaps managing this patient data securely, and even supporting decentralized finance and regulated environment. We see RWA infrastructures as a bridge between Web3 innovation and some real world impact.
Great. How about you, Michael? Would you like to make a quick introduction regarding who you are and also your project?
Yeah, sure. First of all, thank you for having me today. I'm really excited to discuss about these very interesting topics. So I come from traditional finance. I'm a former Swiss banker, and I started looking into Bitcoin back in 2018. At first, it was just an asset class for diversifying the asset allocation of my clients. But pretty quickly, I realized that it was something much deeper, an infrastructure for global finance, programmable, borderless, and incredibly efficient. So that's the reason why I decided to incorporate Nexbridge in 2023. Nexbridge is a regulated serial issuer based in El Salvador, where the legal framework for digital assets is very advanced. Our vision is to bring real-world assets on chain in a compliant way, starting with public listed assets, in order to build trust and increase adoption, and moving afterwards on capital raise for small and medium enterprises by tokenizing, for example, equities or debt instrument. So our first issuance, USTBL, was launched on November last year. It's a yield-bearing digital asset backed by short-term US treasuries and has a wide range of application But that's just the beginning. Like I said, we are serial issuers, so USTBL is just the door opener. And what we are really trying to build is the foundation for a blockchain native capital market.
Yeah, Ben. If I'm not mistaken, both of you guys do, I would say something similar, but closely with the RWAs, or even uh, build the RWA infrastructure as well. So let's just talk about the tokenization, because I believe tokenization will be one of the key factors to the RWA as well. So the tokenization has been a major narrative lately. So in your point of view, what real problems that tokenizing assets like the real world instruments or the treasuries actually solve?
Well, I can jump in. So I'll go towards the problem. The problems are essentially, let's start from healthcare and robotic sector. Essentially, this is fragmented, siloed, intellectual property patents. They all are multiple problems they have with the accessibility and the applicability globally. You can pick and choose which country you use this patent, but essentially you are limited the reach of this patent, and you have to spend a lot of money globally to each country, and some countries will defend it, some countries won't defend it. So essentially, tokenizing real world assets like treasuries or real estate or even healthcare intellectual property solve these problems by improving accessibility and transparency. Because essentially, unless you are a large institution or a high net worth individual, it's difficult to get across these barriers. So essentially, tokenization breaks down these barriers, empower people, and especially many high value assets that are locked in long holding period or legacy systems. By tokenizing on chain, it becomes possible to trade, collateralize, or even use assets in DeFi ecosystem. If someone owns for example, someone owns intellectual property or a patent, it's difficult to go to a bank and get a loan against that. They'll give you a loan against your home, or perhaps against your car or some other assets. But a patent is a unique intellectual property with a huge repercussion in the future. And we have seen that major biotechnology companies have used them as a mortgage them and leverage those to get some cash from the market and then develop that product or sell it, expand the business. But not many banks are comfortable doing that. So you see that tokenization of many assets like that, it helps open up a different kind of market, opens up a liquidity for the inventors, for the technologists, for the healthcare providers or the system creators to build this trust and get more efficient.
Yeah, I agree with Anmol. It's a very nice example on how tokenization can unlock value and more from a financial perspective. And tokenization in general terms addresses several core inefficiencies in capital markets. So I'm in this one. So like settlement delays, high intermediation costs, limited access to quality assets for some countries, and of course fragmented capital markets. So features like 24/7 trading, instant settlement, fractional ownership, programmable compliance, on-chain transparency are really very, very in the market. In developing markets, tokenization represents a natural evolution of financial services. It improves operational efficiency, it reduces friction and costs, and supports compliance automation. Banks like JP Morgan and Goldman Sachs are already using blockchain to streamline internal operation. And this institution see tokenization as a way to future-proof their infrastructure while enhancing performance and margins. But for emerging markets, tokenization is revolutionary. It can literally change lives. It people without a bank account, for example, to hold US dollar yield-bearing instrument like USTBL using only a mobile phone. It helps fight inflation and purchasing power. But tokenization also gives small and medium enterprises access to global capital markets without needing a traditional financial institution. So, in my opinion, it's about inclusion, accessibility, and control, something the legacy system still struggles to at scale. And truly believe asset tokenization is a game changer for Latin America. And many of these countries struggle to attract liquidity because traditional finance system can be complex, restrictive, or simply not accessible. And tokenizing real world assets, they can break down these barriers and make it easier for global investors to participate. So this is not just about technology, it's about opening up capital flows in a way that wasn't possible before. And when combined with clear, supportive regulation, it becomes a real catalyst for economic growth.
I 100% agree with you, and deal with that. Like I'm brought up in Punjab, India, so I've seen that the traditional banks will not finance mom and pops or some households, and they will get together and they create their own small pool of funds, and every month they contribute, and then they leverage each month. Someone will call out and they pick this quote unquote lottery or that day, and they use that small pool of fund they created, and they pay back over a month time with the intermediary taking the cut. So already multiple systems were created where some of the assets people pledge and pool the money together, and that is outside the traditional healthcare financial system or a banking system. So I think what does it? It empowers them. It empowers them in a manner and opens up a bigger market, not just into their neighborhood, on their street, or the small group of friends. It's open up a market globally. And I agree. I think because financial systems, they have regulatory challenges, the type of the country they work in or the jurisdiction they tackle, and many banks are not allowed to lend against intellectual property or the patents, and many are okay, and they do that. But how do you tap into there, and how do you get there? And sometimes some people are globally, they look at intellectual property or the patent that has been created, for example, and they want to perhaps lend that money or lend that to against an asset, and they can have a fractional stay in that, and the community of a group of people, say 1,000 people globally, could step up and end up fund or provide a liquidity against that patent, and they would own some part of that patent too, and it opens up this liquidity for that individual who owns it, and they use that cash to grow their business, to open up the new market. I agree with you. It reduces inflation. It helps also cut down the middlemen, which actually all the middlemen are inflationary. So everything from money you pay to someone to get your work done, that's a tax. And every tax is inflationary. So you remove this extra tax on the project you have, and you have a direct communication. I think it's a beautiful idea.
Yeah, I fully agree with you. And imagine being able to associate a lending value of a specific token and can basically lend or borrow, assets, liquidity, because in exchange they have a lending value for token. That's a huge market, and no one is developing this. So I think it will take time for institutions to understand that there is a market in that area, but I think we should start working right now in order to reach that goal.
I agree 100%. I think there is why blockchain came out, because people were still doing a money transactions out of the traditional system, and why they had to do it, because the traditional system was not able to cater to them. So there's a market need, there was a demand, and then a blockchain end up or the cryptocurrencies end up solving some of those problems. Yes, they have the other side too, because how to regulate, and the regulators always want to regulate. And I come from a healthcare background, being a doctor, a cardiologist, and we are the heavily regulated industry. Especially in the western part of the world. So I do understand that their perspectives to maintain the standard, to protect the consumer, which should be utmost responsibility. I do believe tokenization helps solve some of these problems.
Lovely, lovely. I do agree with what you mentioned. Oh yeah, Michael did mention about the traditional markets. So just curious for the users and also the institution who are used to the traditional finance, what steps did your project takes to build their trust when introducing the tokenized products on chain?
Nice question. So, obviously, coming from traditional finance myself, I know how critical trust, user experience, and transparency are. That's why we built Nexbridge with the goal of giving institutions an experience as close as possible to what they are already familiar with. And also why we started by bringing well-known liquid instrument on chain, like treasuries. And we'll soon expand to other publicly listed assets. These are instruments retailers or institutional investors already understand, and that builds confidence right from the start, right? And each of our token comes with a public term sheet that clearly explains the structure, the rights, the underlying assets, the risk, and the expected return. Very similar to what you will find in a traditional investment fund, for example. And operating under a regulated framework, we have multiple layers of independent oversight, just like any asset manager or investment funds. For example, every issuance must be approved by the regulator following a very deep review process aligned with international standards, of course. We conduct monthly proof of reserve, for every issuance made by one of the big four players in the industry. Asset prices are updated daily, ensuring full transparency for investors. And basically, we enforce the highest compliance standards by allowing only KYC verified wallets to subscribe to or transfer our token. So, in short, we speak the language of institutions, basically compliance, governance, legal clarity, but we deliver it using the efficiency and transparency of blockchain technology. You know, really for us, it's not just about putting assets on chain. It's about doing it in a way that works across jurisdictions, respects traditional finance principle, and brings, let's say, the same level of security and trust that institutional investors expect.
Yep, I do agree that keeping a balance between the traditional market and also the institution does introduce the blockchain technology to the financial institutions as well. So, Anmol, what do you think about this? Any take on this?
I think this is the transparency and trust is the big thing, and I agree with and mentioning and those things. To build trust, you need to have a third party regulatory oversights, in which we're making sure that anything is done in the tokenization economy, there is the protections in place. Obviously, in the traditional system, also there's no a lot of time there's no protection in place. You can go to a bank and buy something, take a money and buy something, and get swindled by someone else. The traditional stock market can be manipulated much easier depending on the whim of a person. So yes, obviously there are many things regulations cannot control, and obviously individual takes a responsibility. They have to decide what they believe in. But as a common as bare minimum market standards, having a third party oversight, so I think is a good thing. What it does, it makes tokenization mainstream. It allows blockchain to become mainstream. It helps makes regulators comfortable because they regulate things. They want to protect consumers, but obviously they has to continue. Innovative financial system has to continue. We have been innovating since centuries, and so I think it's a part of the process. I think we have to always innovation has to stay close end of the regulators, but the regulators will have to let innovation go. You cannot just control everything. Without the innovation, the system will crumble and contribute to inflation. So I agree. I think creating like Anryton. So from our side, we want to create a next gen layer on blockchain designed for ground up for tokenizing real world assets, not retrofitted. Adding a modular architecture for custom smart contracts, built-in data privacy layers. I'm a healthcare provider, so we do want to back up data, the private DNA data, the genomic data in people's hand. And our goal initially was to have a whole genome sequencing, which is a 100 GB data file, and give the ownership to the people, not to the companies like 23andMe, and many different challenges happen in the ownership of the data. So it's people's data getting sold by a private company and profiting from it, and the legal laws allowed that to happen in America. So essentially, our goal is to give an ownership back to the person and let them profit if they want to profit from their data. So essentially, create a privacy layer in such a manner so you have a decentralization, but at the same time balance things out. You perhaps focus on UI, UX in built in such a manner so it feel like you're using a regular mobile application, but still same time have a compliance is there. There's some privacy, but at the same time, some transparency. So finding that balance where we become a compliant globally, including GDPR.
Yeah, how about you, Michael? Anything to add on, or should I move to the next question?
I think, yes. We touch a very important topic, which is market manipulation. I didn't mention it before, but a key decision we was choosing Liquid Network, which is a Bitcoin-based sidechain for our issuance, because in this case, Liquid may not be the loudest blockchain out there, but it's built for where finance is actually going. So this is available, every tokenization project has its own, let's say, features. But in our case, we are talking about capital markets and could have picked a bigger layer one for more headlines today, but we are building, for next 10 years. So in terms of market manipulation, Liquids natively combined with some blockchain technology as features that are natively integrated. So that's very important for conciliation transaction. So to prevent front running, which is a problem in capital markets. We also have native atomic swap for seamless settlement and integrated whitelisting. And this is something that help fighting market manipulation. So just to mention that because it will be a very important topic for the future, and regulators like standardization, like we mentioned before, and wanted to add this.
Lovely, lovely. Let's talk about the technology side. So, on the technical side, what infrastructure choices, such as, let's say, the blockchain selection or custody or even the settlement mechanism, what are the critical elements or the infrastructures when bringing the real world assets onto the crypto rails?
Well, I can come in from handwritten perspective.
Whoops, can you hear me? Anmol?
Oh, sorry. Okay, sorry. Can you? Yeah.
Yeah,
Sorry, I can come in here. So apologize. Accidentally pressed the mic off. And
no
so from an handwritten perspective, because I'm looking at a compliance and very closely, so where you want to make sure that we are compliant what we do using blockchain in healthcare, biotech, and much of other areas. So tokenization exactly. So we support Anryton supports KYC AML natively, allowing whitelisting of wallets for jurisdiction control, and integrates with the off-chain legal frameworks to ensure tokenized assets remain enforceable in the real world. And on the UX side, we focus on abstracting the complexity of blockchain and making sure they feel like a Web2 app, as I mentioned earlier. And whether it's a doctor tokenizing an IP or an investor buying a fractionalized biotech royalties or a patient interacting with the data wall, it has to be frictionless, has to be secure, has to be intuitive. So we don't want to just build a blockchain just because we want it. I want to make sure that it is built for real world economy on chain. So that's what our vision was when we started working in this area. And as we are learning more, we're looking to improve the user experience and making sure that technology is purpose built. Many times we build the technologies, but it's not built for purpose and difficult for people to interact and use it. Because I always believe that the blockchain is beyond just a crypto, and I never just stuck to the crypto. So I focus on the technology, and I see a beautiful, amazing opportunities coming in using blockchain and empowering people, and that's what all about the Anryton Technologies.
I agree. I agree with you, and that's the right way to build a chain. And talking about compliance, a lot of time compliance scares people, and I understand why. But we see compliance as a feature, not a problem. If you want global distribution, compliance is not an option. It's essential. Again, like we said before, regulators around the world are starting to ask standardized enforceable processes regardless of jurisdiction. So unfortunately, I can say that I'm essentially a compliance expert, even if not by choice, because every day I find myself working to explain and prove to banks or other financial institutions handling money flows, for example, that our operations are not only fully compliant, but in many ways are even more robust than the procedure they're using. So the real issue here is a huge knowledge gap, which makes meaningful dialogue difficult. It's not the resistance, it's simply a lack of understanding. And like anything complex, it takes time to overcome. And I believe that compliance and decentralization are not in conflict. Decentralization doesn't mean chaos. It means ownership, transparency, and freedom with accountability. And that's the future we are building. Um, Not just innovation, but trust at scale. And coming back to your original question, um, you know, technical side and infrastructure choice depends. I guess it really depends on what kind of assets you're bringing on chain and how you plan to distribute it. There is no one size fits all setup. The infrastructure needed for tokenizing real estate, for example, is very different from what's needed for public market instruments, right? So, of course, at Nexbridge, we are focusing on capital markets. So we made infrastructure choices that are very specific to what institutional finance need. But more generally, I think the right setup depends on on question: is the asset regulated? Because if it is, that has a big impact on your infrastructure. It influences the blockchain you're choosing, how you handle custody, what kind of transfer restriction or whitelisting you need to implement. And then, of course, distribution, because if you want to trade your token on centralized exchange or in DeFi, or you want to allow self custody, well, then you need to also set different rules and you have different settlement speed, wallet compatibility, permission controls. So basically, your distribution plan shapes your technical architecture. And at the end, we don't need to forget who are the end users. So if a project is targeting institutions, of course, they care about stability, auditability, and compliance. But if you're targeting retail clients somewhere else, then you need to prioritize maybe, I don't know, accessibility, low fees, self custody. So you can't define your infrastructure without knowing exactly who it's for. That's at least in my opinion.
Lovely. Yeah, I do agree with that. Oh, yeah. So currently we do have around 800 plus listeners right now. So guys, after the next question, we do have a airdrop available, and it's called Coinbox. And in order to be eligible for that airdrop, you need to download the Coinstore app and get KYC. And I'll read out a Coinbox phrase, and after you just insert the phrase, you will get X amount of airdrop, etc. All right, so guys, I do have another question for you. So let's talk about the adoption challenges. I think from my understanding, there's only like 5% of the mainstream or users are actually users of blockchain technology. So and this shows that there's more potential, and uh just wondering what are the biggest obstacle to a wider adoption of the tokenized assets today? Is it like the regulations? Is it because of the liquidity, or is it like the user education? So, is there or is there something else? So, could you guys share? What are the adoption challenges?
I can chime in.
Mhm.
So I think it's a great question. I mean, sometimes we do think the idea, the brilliant technology, or the drug we are making, or the financial solution we are doing it. But many times, as the inventors, we fail to take off. And why? Because of adoption. The biggest challenge of that idea, the concept, is for people to buy in. And I do believe, I think this is a all-in-one, the combination you mentioned, liquidity, education, or something else which we don't know. But if you have to choose one, I'll pick trust and understanding. Liquidity can be engineered. UX, UIs can be improved. But earning trust in tokenized real-world asset requires a deep user education and a strong institutional credibility. Most people still don't know fully grasp how a token can represent a treasury bill, for example, right? Or a biotech patent, or a share in a building, let alone trust in enough to invest or use it. So yes, liquidity is a challenge, but liquidity follows trust, and a trust follows clarity. So that's why we at Anryton Technology, so we are obsessed with making real-world assets use cases not just accessible but understandable. And from clear UI, transparent audits to compliance first onboarding, we want to make sure that it's built on trust and fill that gap. In the end, adoption isn't just about technology, it's about making invisible feel real. And that's what we want to make. Making sure that people understand the problems they're facing today, and can we solve the problem? If we can, and definitely we will have a more adoption.
I couldn't agree more. Maybe I'm a little bit biased, but I I believe that tokenization will be the biggest financial evolution since the introduction of the ETFs on the equity markets in the 90s. And as I often say, if something is cheaper, faster, and safer, either you adapt or you get left behind. So I think so. There is no doubt that adoption will increase in the future. Of course, there are challenges right now. And I also think that it's a mix of lack of regulation or regulation certitude, lack of liquidity, which is linked to distribution, and user education. So, real changes doesn't happen overnight. Like we discussed before, there are entry barriers right now. Mainly due to fragmentation and also lack of interoperability between platform and jurisdictions. And that's absolutely normal at this early stage. With any new financial technology, these things get resolved as adoption grows and standards emerge. And this is what we are trying to do right now. I think that in emerging markets, adoption is moving faster, mainly out of necessity. People are facing inflation, currency instability, limited access to global capital, but education is a real barrier there. It takes time to build awareness and trust in these new tools. In other countries like Europe or the United States, the infrastructure is already solid. So the need for change feels less urgent. And institutions are more cautious, and tokenization is seen more as a way to optimize margins and improve efficiency, not to solve existential problems, but so in the middle of a generational shift, investors are tech native. I see that with second generation of my clients. So their kids are talking about blockchain, crypto, all the time. And the father is like looking at them like, what are you saying? So universities are also starting to teach blockchain, like they teach banking or economics. And I think in a few years, it will simply be part of this standard financial toolkit. And the entry barrier will naturally decrease also because we'll see a more standardized legal framework for tokenized assets worldwide.
Yep, I complete. Oh, can you guys hear me? Hello?
Yeah, we can
All
hear
right,
you.
cool. Yeah, believe that users education is very very important because even today, because I'm from Singapore, so even when I talk to my friends or families about blockchain, they still think that it's a scam and it's thing that being used by the terrorists. That's what my parents told me. So and when you introduce blockchain to them, let's say crypto to them, it's hard. So when you talk about, let's say, RWAs being tokenized, so it's going to be very hard and it really takes time. And I like how Michael mentioned that, yes, blockchain is slightly being introduced to the younger generations of different channels. Because, for example, on YouTube or even on Twitter, there's a lot of information regarding the blockchain as well. We do have a bunch of events that allows the audience to get a better look and get a better understanding regarding blockchains. A bunch of side events, even for example, Token 2049 will be one of the biggest event held within the blockchain space. So there's a lot of things going on, and I'm pretty sure a lot of side events does bring a lot of insights for the audience regarding what the RWA is, or even other projects. Because I went to the Token 2049 in Dubai and also in Singapore last year, and I learned a lot. And that's where I met a lot of fantastic, brilliant projects with a lot of great ideas. And yeah, so like I say, getting the user education does bring the wider adoption for the space as well. So it's time for the Coinbox code. Guys, like I mentioned earlier on, if you haven't downloaded the Coinstore app yet, feel free to get it downloaded and get KYC. And I'm going to read out the Coinbox code right now. All right, so the Coinbox code would be CGLQOTDC. I repeat, CGLQOTDC. All right, so let's talk about the real use cases. I like how Anmol did mention that for the hospital part, because I did talk to a project. I forgot the exact name of the project, but they mentioned that they are able to get the patient's data being stored online on the blockchain, not online, on the blockchain. And of course, there's a purpose for it. So, Michael, would you like to go first? Would you like to share some of the real world examples where tokenized assets like your project, how it makes a difference and where you see a clear demand?
like I said before, USTBL is just the first of a series of issues. So choose to tokenize treasury bills because it's a very well-known high trust with a defined yield instrument. And there are many potential use cases. One of those is, for example, use USTBL as a low-risk investment alternative to investors in order to, help to reduce overall portfolio risk. It can also be used by institutional investors, for example, to place liquidity when they change asset allocation or invest in adverse market condition. Kind of daily accrued interest instrument or a money market instrument for the digital asset ecosystem. Right now, a lot of digital asset investors, when they decide when they are in the risk flow, they simply hold stablecoin. So this is an alternative to hold a stablecoin, if you will. And then again, we mentioned that briefly before in high inflation markets, like for example, Argentina, this can help users to store USD value and earn a return without having a bank account. Again, in some countries, there is limited access to US dollar denominated financial instrument, and USDBL can solve this problem. But, can also be used as a collateral for derivatives, for example. There is a huge market of people that are basically locking a stablecoin in order to get exposure on derivatives. Now, imagine that you could do the same, earning a yield on it for the time that you are locking your as a collateral. So you are basically decreasing your risk and your capital are always at work. Or you can use, like we said before, with patents or a tokenized instrument as a collateral for borrowing services. So we are just at the beginning, but these are only the three use cases that, let's say, which we have traction, but I'm expecting this list to expand quickly.
So how about you, Dr. Anmol? What's your take on this?
Regarding treasury bills, or sorry?
Yeah, the real use cases of your project. How make it different, and where you see a clear demand for your project.
Well, we are focused on starting. Anryton was built on solving a real world problem, which is the data ownership in Canada, for example, by law. People are the owner of their healthcare data, but they're never given the data to them. So it solves that problem. In the Western world, people are the owners, but essentially the data is with the custodians that profit from it. They could be a healthcare institution, could be a doctor, could be a clinic. So we solved that problem where we gave the ownership back and in their hands. So I actually own it, not just in writing in a law, but actually as an asset. And it also becomes much easier to use the data for in clinical trials. There's a lot of times pharma companies or the people who are trying to discover a new drug, they go to these institutions and try to find the patients, and these institutions make money in the back end, but use someone else's data who's an owner, for example, in Canada or in America or some other country, but the custodian who's profiting from it, and just because the custody is in their control. So they are allowed to profit. They make multiples of that. And actually, someone who owns the data gets nothing in exchange. That's a critical problem we have to solve, and that lacks a trust. And there are many clinical trials, many new drugs cannot be discovered because people don't trust the doctors, the hospitals, many times that the data will go in the wrong hands and someone else will profit and happening, right? We see that all the time for the recent cases in US to Europe. So we solve the data ownership problem. We are launching a Web3 application, essentially on your own cloud. You'll be able to back up your personal data from your smartphone through Vautra, VAUTRA, launching early May, right after token event in Dubai. What it does, it gives the ownership of your own personal data, not in a traditional cloud you're storing on Apple or Google. So where someone can, you don't own it, you're paying a rental fees. So essentially, we are giving the ownership in people's hand instead of paying a rental fees. Rather own your own data. No one can access it except you. You decide. You be the master of your own destiny. So we are going to solve this problem: data ownership. Could be healthcare, could be non-healthcare, could be anything, and give a privacy to that. Have extra layer of those tools that people feel empowered, making sure no one else is snooping into it. there's no master key, let them unlock it, or someone, some jurisdiction, or some authority can access. So we want to make sure that it is decentralized in the core and the principle, but at the same time empowers people. So that's what the differentiating feature for Anryton vision and the technologies we are looking to build and launching that are getting built on this platform.
Yeah, man, that's the beauty of blockchain because ownership is very, very, I wouldn't say it's important, but part of the whole space because, like we mentioned earlier on, no, I mean, like when I talked to my friend about blockchain, the most easiest one that they can understand would be not a case, not a crypto. So, what does it mean that if you own a crypto, let's say you bought let's say one Ethereum, but you leave it on the SAX, for example. And one day that SAX just went bankrupt, and you just lose the having the ownership and the that it can be played or be improvised into something to what I meant would be like implement with other industry does bring a lot of benefits to different industries and also the users as well. All right, so this my last question. I do have a Coinbox code available, and this time, before I announce the Coinbox code, kindly go to Dr. Anmol and also Mr. Michael's Twitter account and give them a follow. Of course, from their bio, you will have access to the projects that they are representing and also they work with. So feel free to give them a follow as well. All right, so here is the Coinbox code. It would be DRFBCMNE. I repeat, DRFBCMNE. All right, here's my closing questions for both of you guys. So if you guys could send one message to both the sorry, let me just switch another one, make it much more easier. Let's talk about the future vision. So, looking ahead 1 to 2 years, what do you see the tokenized RWA space evolving? What milestone or breakthroughs are you personally excited about? Michael, would you like to go first? Oops, hello? Can you guys hear me?
Oh, sorry, I'm here. The digital space is set to grow significantly. So, especially as legal framework will continue to mature. But I'm not expecting a big growth in the next 1 2 years because there is still a major distribution challenge. And like we discussed before, it takes time, to standardize processes, getting licenses, and so once legally safe and starting across jurisdiction, will adoption will accelerate. So I'm in the next 1 2 years, I'm more, pilot programs, sandboxes on different countries. For example, we are part of different sandbox in LATAM, trying to explain why we are doing our issuances, how. So we are part of sandboxes. So I think we will see a lot of this integration. Uh, Targeting regulatory clarity. A lot of countries that recognize this opportunity, especially in emerging markets, are likely to move faster than others. So that said, I think full-scale adoption by large financial institutions will take more time, probably at least 3 to 5 years. But once it becomes legally safe and standardized across the global financial system, but again, it takes maybe I'm wrong, but that's what I'm saying with my personal experience.
No, I'm very positive about it, and I'll take a simple example. Then I go to a little bit more unique example. So I think real world assets are going to allow ownership much easier. We are seeing in UAE in real estate it is happening, and that's what the government is looking to implement that. But I see beyond real estate. I see that opportunities coming up over the next few years in vehicles, cars like Ferraris or Rolexes. People believe that which is more valuable, or the painting, or the unique artwork they have, it or collectible item. I do say the first adoption will be happening in those areas of tokenization, giving a fractional ownership. You don't have to buy a new Ferrari. You can be the own fractional ownership of that. Already happening in South of the world, fractional ownerships out of the tokenization world, where you own an apartment or a building or a resort, or you do buy a 7 or 10 resorts into that pool, and you can go spend time in all of them if you want to do it on a yearly basis. So people are doing that already in the Western world. So those things, but now they're getting it tokenized in a manner making much more affordable. What we are doing in a more unique way, obviously we'll be doing those too, offering to tokenize your real world assets. What are the assets you have? Your car, your jacket, your clothes, whatever you have, but you want to tokenize that because you want to define first ownership, that you are the owner of that. What we're doing is we're using NFT as a proof of ownership. And we showcasing one pilot we did in Canada, where we showed that, okay, you are the healthcare data owner, so you are the t-shirt owner, you are the car owner, the homeowner. NFT defines a legal token of that ownership. So under that, we made a digital wallet. In a digital wallet, we move the health record files there, and now you are the owner of that wallet. So it's connected to you. So wherever you'll go, the data will be keep coming into that wallet, keep making this wallet bigger as you go into store your data. But since you own this NFT, you are the owner of that wallet. So this is how we are solving the problem using the real world problem challenges, using blockchain technologies and implementing NFTs, giving the ownership in the people's hand. So similar way, I do believe we are expanding into the automotives. We're going to expanding into the artwork, the watches, and other things. Give the ownership back to the people. If you're wearing a jacket right now, listening to me, or a jean listening to me, can you truly prove that you are the owner of that? If you have a receipt right now, you probably can. Otherwise, many people throw away the receipt. So maybe someone else's jacket you're wearing right now. But tokenizing that, NFTing that, allows us to prove the ownership of the jacket or the jeans you're wearing right now, and then allowing you to perhaps sell it, exchange it. So we see growth opportunities in that area.
Yeah, I agree on that. And I think this will also depend a lot on the jurisdiction of the country you're doing this. Now, I'm not an expert in the UAE, for example, but I give you a concrete example. In Switzerland, you can have tokenized share. So transferring a token instantly transfer also the ownership of the shares. But if I'm trying to do the same in El Salvador, it doesn't work because there is still, by law, paperwork to do. So I can transfer the token, but then I still need to do paperwork in order to transfer the ownership. So, but it's true that you can use tokenization for use cases like Anmol just mentioned. There are, for example, banks that are tokenizing crypto banks that are in Switzerland that are tokenizing, a Picasso, for example. So this is a way to transform something illiquid and in an liquid instrument, and you can be a owner of a part of a Picasso. And of course, there are estimates made by a third party that will give you certitude of the price, and you can use it. You can lend this token against, I don't know, by receiving cash or liquidity. So I'm seeing this in the future, but this is more for what I call private issuances. So something which has a limited number of investors on the project. On public issuances, I was referring my vision on public issuances. So a very large number of clients buying a large number of tokens, then I think it will take more time. But definitely, everything Anmol mentioned, it's valid.
Thank you.
Love you. I really felt like both of you guys I mean, like, both of you guys know what you're doing, and of course I believe there'll be some questions from the audience. Let me have. All right, so there's not no sorry, let me repeat myself. I'll rephrase myself. So I think I saw some, but somehow it been missing. But all right, so if you guys have any questions regarding the RWAs or anything that you are curious about, I believe Michael and Dr. Amol, it's more than happy to answer. So feel free to DM them if you guys are curious about what the questions, or if you're looking for an answer regarding the RWAs. I believe Dr. Amol and Mr. Michael will be the perfect person to ask about. All right, so without further ado, I guess this would be the end of the panel discussion. And of course, I'm very happy that Dr. Anwar and Mr. Michael is able to participate in the panel discussion. Definitely, I learn a lot because it's every time when I speak to different projects, they have a different perspective, and it brings a different layer to a the track. I would say the track. So of course, I would like to thank Dr. Amol and Michael for coming in. Thank you so much.
Thank you so much for having us. And I learned a lot about T-bills, U.S. Treasury, and the problems in Latin America and Africa and other part of the world. And it was a mutually beneficial.
Same for me. I hope we can meet in Dubai if you're coming to Token 2049.
Definitely, we'll look forward to meeting you together. Definitely, we have a team
Cool.
in Dubai. We have an office in Dubai, and our chief legal officer Ruchi Bendra. So she'll be also speaking at the events there. So yeah, looking forward to
Great.
meet you guys.
Yes, yeah. Speaking about the Token 2049, we do have 3 events being held on the Token 49 Dubai. One will be the main event, and we do have a side event and also a after party. So the tag on the space is regarding the information of our events in Token 2049. So if you guys are in Token 2049, feel free to come drop by our side event or even our main event, and we can have a chat and connect maybe. All right, so that would be it. Thank you so much and have a great day. And thank you, everyone who tuned in. Thank you so much. See you guys on the next panel discussion. Goodbye.
Thank you so much. Bye bye.
Goodbye.
Bye bye. Thank you.